Good afternoon, traders and investors from around the world. Josh here, still filling in for Joel this week as he takes some time off. Today we're going to have Todd Gordon, founder of New Age Wealth Advisors, on. But let's take a quick look at the S&P futures here. This morning came off the pre-market, surpassed the pre-market high, above 4,300 level, but then we started selling off, and we're at where we are now, about down 0.3% at 42.78. But I'll leave the rest of the futures till later, and I'll actually bring on Gordon, or Mr. Gordon here. Todd, how are you doing today?
Mr. Gordon. I'm good, Josh. How are you? Nice to meet you.
Nice to meet you as well. So yeah, I mean, we saw the futures, or the S&P, at least hit that important level today. But what's your technical take on the market here?
Yeah, little everything going on. I think the big thing going on here, S&Ps are fine. I was talking to Josh sort of backstage and Zoom backstage. I follow the cash, and those of you who are on the show, when Joel's here, I just have always taught to track the cash and have an idea what's going on in the futures market, but whatever. The S&Ps have been kind of quiet today for the most part. There's a lot of rotation happening today into value and out of growth. So the Nasdaq's down, NDX is down 1.65. I think there's a few reasons for this rotation. Financials are doing well. Regional banks have been up pretty solid the last couple of days. So nice little kind of pause to the big tech rally we've seen. I don't think it's anything permanent, but what it's doing is bringing in a little bit more widespread participation, because Josh, I don't know how much you're following along, but everyone is not trusted. For the most part, people aren't trusting this rally that happened before and after NVIDIA, because it's only being led by a few big growth stocks. That picture's starting to broaden right now.
Yeah, interesting. So have you been watching any regional bank stocks in particular that are now popping up, or what are your thoughts there?
I'm not. I'm pretty much just watching the KRE. I'm trying to not be a trader. I was trained as a prop trader, and I traded for a CTA and a hedge fund in my 20s and 30s, and now I'm in my mid 40s. So I'm trying to stretch out those positions. And if I get into the KRE regional banks, I feel like I'm going to be back in my 20s again, trading Tyco and WorldCom and Enron. And you're way too young to remember that.
Yeah, a little bit before my time.
No, not doing any of the regionals, but just watching. I think KRE is up really, really well. And the other thing I'm watching is real estate. I don't know how much you're watching the sectors, and just stop me. You're the boss of the show here. I'm getting out of line here.
Let's take a look at the real estate. Yeah,
just check out XLRE.
Yep. Taking a look at that. I'll share my screen here.
Yeah.
There we go. Yeah, up today almost 2%, and it's a nice trend, at least over the last couple of weeks. Almost approaching the 200-day moving average there.
Yep. And it's been very weak on that. Right. Is that a daily chart? Yeah. Your top right daily chart.
Top right daily chart. Yep.
Yeah. Try to get down back to the old lows. Did a Fibbo retracement, big old deep Fib retracement, which is the 786, and it's been straight up from there. And, I bet you if you overlaid KRE, I could do it for you if you like, but you overlay real estate on regional banks, and it's going to be pretty tight. So we're seeing certainly a reprieve there, which has been very, very good. And I think kind of driving small caps, driving mid caps, and it's just widening the participation. And sort of, I'm sick of hearing how everyone doesn't trust the bull market, because a lot of people want to be bearish in this market now that we broke up. Again, they're saying, oh, there's not a lot of widespread participation because it's led by growth. And now we're getting that widespread participation. So, I'm kind of, I'm leaning on, I'm really enjoying the tech trade, but I'm completely fine with some of the undersectors starting to participate. And I have a few reasons why that rotation is happening. But I think it's all good. And I think, just to shut up here in a sec, we had a lot of data Monday. It was kind of weak with, I think, ISM and PMI. And the data front is pretty quiet this week. And I think everybody's just watching for CPI and FOMC next week.
Yeah, that's right. That's coming next week. If you wanted to share your screen to do the carry over the XL
Oh, that might take
RE.
me.
All
Yeah.
right, it's okay. You
No, I
we
could try
can
do
we
it.
can
No,
keep going.
can you, in TV world, I'll say, can you buy me about 30 seconds and fill the air?
Yeah, I'll buy about 30 seconds here.
Perfect.
Yeah. I mean, we're taking a look at well, we've been taking a look at all the rotation here, as Robert pointed out, and even as yesterday we had on who did we have on yesterday? That was so long ago. We had on oh man, well, my mind's going blank, but
All right.
is that 30 seconds
You did
enough
a
to
great
buy the
job,
time
man.
there?
Great
Yeah.
job. I stole the screen from you. I hope that's okay.
Yeah, that works.
And yeah, I mean, so in blue, kind of teal is XLRE, real estate ETF, and then white is KRE. And there's been a divergence here for a good period of time. This is going back to 21, but big old gap here, and looks like Q4 of 22. And then as we scroll in here a little bit, this is a daily chart. You can see that clearly they're trading together on the upside.
Mm-hmm.
But
Much less divergence there. Do you
yeah,
ever pair trade anything?
I
Like,
don't. I'm pretty much focused on just running portfolios. I like to do some option trades. Like I'm short Target right now with a butterfly in the downside, a little bit of a hedge, but we're mostly swing trading portfolios. And this is something, kind of a pairs trade here. Where am I going? Growth value. Joel's seen this chart a bunch of times, and I'll throw it by you. I think it's one of the most important charts out here, and I think it's the real driver of rotation in this market. I'm going to set this chart to the side and focus on this guy right here. So what we're looking at here is from Q4 of 22, summer 22. This is the value growth ratio. So you're talking about pairs trading. Do you do any ratio charts dividing one into the other?
yeah.
Okay. So this is IVE, which is the iShares Russell Value, into IVW, which is the iShares Russell Growth ETF.
Okay. Yep.
Okay. And
gotcha.
What I think is super cool is as we had that big inflation scare, and we continue to in 21 and into 22, here's US 10-year yields. So as yields are going up, that inflation scare, that's clearly driving the value growth ratio. Look at that correlation.
Yeah.
Right.
Yeah, that's really lining up lately.
Right. So what happened is value is, as the black line's going up, value's outperforming growth. Value made a new high here in Jan of 23 as the 10-year yield stopped going up, made a lower high, second lower high. And then all of a sudden, value growth got the memo, and growth has been rotating in, as you said, from the beginning of this year. Well, okay, so this has been the tech rally, communications and consumer discretionary is starting to get on board. But what's happening now is look at the 10-year yield again. It's starting to move back up. So I think part of it is like, oh God, why are we going back to 3.7, 3.8 on the 10-year yield? And now the value growth ratio is starting to respond. So I love this tech rally, and I've loved being long NVIDIA and a bunch of tech stocks, but do we have to look for rotation? And why is that 10-year yield trying to knock on the 3.940 handle? And if it gets above that 4.0 in the 10-year, are we going to start to see this happen again? I hope not, but that correlation has been around for a long time. You know what I'm saying?
Okay. So are you more focused on the technicals of the bonds, or of the rest of the stocks, the value and growth stocks that you're looking at?
Thanks. Good question. Both. So I'm a big, you might be sorry you asked, but I'm like a closet Elliotician. Like I love Elliott Wave. It's just something I was always trained on. And it's how
All
I
right.
gauge risk reward and support resistance and just know where you are in a trend of correction. And this is the wave count on the US 10-year yield daily chart. And this is
Mm-hmm.
going back to October 22. So Q4 22 rallied up. And here we are again. This was the May high, sold off, and now yields are starting to get a little spicy again. This is the resistance zone they should have held. They did hold, but now we're getting a little spicy again. And again, that's why I think we're starting to see this rotation back in. Why are they selling
Right.
bonds longer term? Is it inflation fear, or is there something else going on? We're through the credit, the debt ceiling, which was pushing it. But this is one thing that really could derail the growth and tech trade right here and favor rotation back into the more reasonably valued, look at value stocks. Look at
Right.
home
Okay.
builders still at 7.5, 8 times forward earnings. So yeah, I love to look at the technicals of the rates.
Okay. Okay. Well, yeah, that's good stuff right there. And I know Joel, he says you're what, technically driven and fundamentally focused. That was his
Oh, that's
saying, something like
really
that.
nice.
Well, yeah, I'm not taking credit. That all goes to Joel there.
That's
But
really nice. Joel's a
what
wonderful guy.
yeah, what are your thoughts on, these fundamental reasons behind, where these bonds and rotation is going?
Yeah, again, I don't know, and I'm more of a trader than an analyst. That you got to be fine saying I don't know. I don't know
Hmm.
why they're selling longer term bonds. I think they're trying to reach for another 25 basis points on the short end of the curve. If we get it, it's not in June. It's not next month, next week. It's supposed to be next month. There's a lot of time between now and then. But why is the longer end of the curve starting to move up a little bit? And why are they selling longer term bonds? I don't know. If anybody knows or anybody pops in the chat, I'd actually be interested. I haven't gotten any reason, but just look at look at home builders, look at XHB. I don't think there's legs behind this move in yields. And if you look at the home builders, and I think I have 10-year yields overlaid on there. So XHB in white, home builder ETF over the same 10-year yield, nice inverse correlation there.
Okay.
Between the two. Sorry, I hope I'm sharing screen. Am I or
Oh,
no?
you stop sharing your screen. You can share it again
Shoot.
there. There we go.
Oh man, I
Now we
was
see
taking
it.
you through a bunch of stuff. Sorry.
Oh, well, we saw it for a bit, just not for the last couple minutes, but
Oh, sorry about that. So yeah, so this is that 3.738 level in the 10-year yield. I'm hoping we hold resistance. I'm thinking we
okay.
will, because I think there's a pretty good correlation here with housing stocks and with the value trade, et cetera, et cetera. But you look at XHB, you look at Toll, you look at Lennar, we're watching TriPoint. There's Meritage, there's some stocks, some home builders that are ripping. And if you just, I find it easier if you're doing overlays just to flip one to the other. You're comparing apples to apples. Look at how much home builders are rallying, even with rates, the 10-year yield, which determines the 30-year fixed mortgage for the most part. That's indicating that, perhaps the 10-year yield will start to move this way, which again, I flipped the chart upside down. So maybe the stocks are being a leading indicator for yield. So I'm thinking that there is going to be failure here at the 10-year. And that's what I'm saying. I don't think this big rotation that we're seeing into value is anything that's got any legs. Like I said, data was weak Monday, but that was most of the data for the week. And then we're looking ahead to next week. And you just look at what's going on today. XLK, tech down 1.6, comms down 1.16, consumer discretionary 0.8, healthcare 0.3, and then staples, financials, materials, industrials, utilities, real estate, energy up 2.61. So,
Yeah, that's a lot for the energy sector.
huge move in energy, right? I mean, are we putting on an inflation trade right now? Or is crude oil coming back and longer term bonds being sold?
Mm-hmm. Yeah, that's a good question. I mean, crude today is up maybe 1%, which is a decent move for crude in one day.
Yeah. Yeah. And we bought some, I could show you XLE. We bought some, and I'm just stop me, man. I tend to go on. So if there's something you want to jump in, just tell me to shut up.
Well, no, this is great stuff. I'll take all the technicals you can give.
Okay. We bought two oil stocks. Again, I'm a big Elliott Wave guy, and XLE. So this is the energy ETF going back to pretty much summer 22. I think it's in a triangle. And the cool thing about Elliott Wave is it kind of takes your traditional patterns that and gives expected starting and stopping points, points of confirmation, points of ruin, and that becomes your trade and investing plan. But I'm thinking we did a 5-wave triangle here, and energy should be 5 waves labeled with letters A, B, C, D, E. Seems to be we're kind of holding support here. We bought Pioneer Natural Resources in Devon. I think we bought them here, took some heat. Stops, we're pretty much using XLE as stops on it, stops below 74.50. And it looks like we're getting that little move up. And again, we were looking for support down in here. I didn't think we were going to take this final drop and then move, but that's a pretty big breakout there in XLE. It looks like you broke the high from May, late May, and then this little June 5th high. So you just kind of broke a triple top here with 10 minutes to go, but that's a strong move in energy.
Mm-hmm. Yeah, that certainly is. And so what's your kind of time horizon on the trade like that? Or are you just, following the levels there and waiting for it to, reach your profit target or stop?
Yeah. So it's a good question. So, if Elliott's it's just a part of what I do. It's where it's the technicals that I do, but I do, there's multiple steps to it. But the Elliott Wave would say that if this is a wave 5, triangles only happen in a trending move. Triangles only happen in a 4th wave. So that would mean you have one more wave 5 to go before you meet a more significant correction. So the implication should be up around 105 for XLE. In the time frame for that, you can look down. I mean, what's a proper expected reasonable angle of ascent? Maybe at that angle. So that puts you at the end of this year.
Okay.
Maybe a rally in, and then you would expect a correction back and kind of reload again. So, maybe something that takes us for the next 3 to 5 months, I would say.
Okay. Oh, interesting. Yeah. So I guess would you consider that a medium term trade, a longer term? Yeah.
Yep.
Okay.
Yep. Exactly. Yeah. We hold a stock, an actively managed stock desk on our research business. Then I run 2 portfolios for our wealth management business, and the wealth management's, I readjust the portfolio probably 5-6 times a year. And then the active managed portfolio, we're moving stuff every week. So yeah, I don't want to get too focused on the value stuff. Like I said, there's some interesting industrials that are out there. Energy's looking good. Staples are kind of coming out, but I still wouldn't give up on the growth trade. You just look at what Tesla's doing. Apple's at all-time highs. There's so much happening. I think Netflix is a holding. Looks great. I still think NVIDIA's got room to go. So I just think they're taking this lack of data and kind of quiet before the Fed next week. Take a little profits in the growth that's done so well. Kind of give the value trade a little bit, and then maybe we reset and find a whole new week next week, if that makes sense.
Yeah, well, I mean, the CPI data is certainly gonna move things, that's for sure. Once that is, and there's also an FOMC meeting next week,
right?
Too. Is that
13th is CPI, 14th is FOMC. Exactly. And
Yeah.
right now, it looks like I think they're 70 something percent chance of doing nothing next week. You ever go to this website, the CME Fed Watch tool?
I not the Fed Watch tool specifically, but okay, yeah, let's take a look at this.
Okay, yeah, this is fun. So this is this is going to be for the sorry. So this is for the June 14th meeting.
Yeah, yeah.
Currently, we're at 5.25 Fed funds rate. So right now we're at a 64.4% chance of staying on hold.
Mm-hmm.
Yesterday was 78.2. And then we are at a 35% chance of going 25 basis points next week. Yesterday we were at 21. So again,
Okay.
what came out? Again, why are that's a pretty good size move. We went up 14 percentage points.
Yeah. Well, I know I think the Bank of Canada. I don't know if you know this, but I'm also, like Dennis, a fellow Canuck up in the north here.
Where are you in Canada?
I'm over in Alberta.
You're in Alberta. Okay. So are you safe from the wildfires?
Yes. Yeah. Although there's been a lot of action here with that. Yeah. Like we had to open up some emergency center. Well, a bunch of emergency centers for people to evacuate to. But it seems like it's getting better though,
Oh,
which
good.
is good. Yeah.
Thinking about
But
you guys, man. I'm
yeah.
3 hours south of Montreal here in New York, 2.5
Okay. Yeah.
hours south. So we're getting all the smoke over us, and 3 hours
Yeah.
south to us to New York City. Like we're getting a lot of it here.
Yeah. No kidding. It's been a dry season. That's for sure. But I mean, I don't know
My
if this
my
counts as a.
grass out there
Oh
might
yeah.
catch fire here soon.
Oh no, you're gonna have to go water it.
It's I've got the sprinklers running like 2 and 3 times a day. It's crazy. It's been so
Holy.
dry. But
Yeah.
hope you guys are all right.
Yeah. Thank you very much. Yeah. I mean, we are. But I mean, Canada in comparison to the States, a lot smaller. But the Bank of Canada actually just raised our rate by a quarter point today.
Right. Right.
So
Now, was that expected?
I mean, I think it was partially expected, although it was a bit mixed. I want to say, if we had the CME group focus on the Canada rates, it could have been 50-50 or closer to there.
Now,
So anyway, yeah.
what's dollar Canada doing? Have you seen the rate?
I have not at the current moment.
Okay.
Yeah.
I can pull it up quick here.
Sure, yeah.
And then right here, dollar Canada. Here we go. This is my futures watch list here. Oh, wow, that got real small. I just like to overlay crude on dollar Canada to see where we're at.
Yeah, we're often a bit correlated with that.
Yeah. Sorry, I brought it over from a 4K monitor. Okay, so
Okay.
yeah, there's been a lot of Canadian dollar buying here against the US, so dropping pretty sharply.
Mm-hmm.
Yeah.
Mm-hmm. Okay.
Yeah, dollar's coming off. Canada's, that's a big support zone there in dollar Canada. And that would be another, there tends to be a good correlation, obviously, with crude. If dollar Canada breaks, oh my God, the scales are so small, I can't even see it. But if dollar Canada breaks down through this level, that should give crude more of a push based on macro correlations.
Mm-hmm. Okay. That's a good level to pay attention to. EKS is just wondering in the chat here, your thought on REITs. They're somewhat correlated with the home builders maybe, but what are your thoughts there?
I have a whole scan in Optum. I have a whole setup, and we go through all the various industries within REITs, and there's some some wildfires obviously going on in certain industries within REITs, but then there's some some very strong points. And there's one that we looked at. You have to be very careful and not try to reach for too much real yield in the REITs. There's one that I'll throw in front of you. We were just talking about today. What's the symbol? EQIX. So I think it's
Okay.
Equinix. Check this one out. It's not a huge yield. It's sort of a diversified REIT that I find interesting. I don't hold it. We're
Okay.
considering it. So it's only paying a 1.84% yield. It's a little pricey.
Oh,
It's
yeah.
80 times forward earnings, but it's a $69 billion market cap company. And they've got a lot of international exposure. They're based in California.
Oh, interesting. Okay.
46% of revenues in America, 32 Europe, Middle East, Africa, 22 Asia. They operate 5 verticals: cloud, IT services, content providers, network, mobile services, financial service, enterprise, blah, blah, blah. So, there's some industrial REITs, that look good. Some healthcare REITs that look good. But there's also, as I said, there's some horrible looking ones. And, I'm not opposed to it. I'm not super active in the REITs. I think you just have to do so sparingly. So I hope that was somewhat helpful.
Yeah, I think so. Do you have to go here? We're almost we're about a minute and a half to the close here.
Oh my gosh. Wow, that was fast.
Yeah.
Tell me, I'll pop off if you want help with anything. I'm here.
Well, yeah, I'll appreciate it. And it's great to meet you, Todd, and I'm
You too,
sure we'll
Josh.
see you again soon. Yeah.
Okay,
But
man. Thanks a lot. Have a great rest of the day.
all right. Thanks, Todd.
Take care.
All right. So getting back to the futures here. Well, we're coming into the close, about a minute away. Let's see, still hanging around that 42.75 level. The dollar today, that's been up and down, but it's essentially, unchanged from yesterday. We had a little bit of an expanded day with that. But yeah, sitting at 104. The bonds, as we were going over there with Todd, we're down about 1%. Currently sitting at 126. And crude, that was up 1.2% today at 72.75. Let's see if the daily chart can load. We just about touched Monday's open there. That open was let's see, 73.40, and we only got to 73.19 today. So I'll be looking at that level at least for the next couple of days in the shorter term. Gold, that's down 1.3%. Kind of following the rest of the market there with that pop in the morning. But trailing back down here, currently at 1956. Sorry, you only get the 15-minute chart as whatever interactive. Hey, there we go. We can really see that expanded trading range today on gold. And Bitcoin, that's down, back down today, 2.3% at 26,489. And there we go. Market's closed. Let's see where we ended up here. Yeah, right around that 42.75 level. I know Joel with his futures, he's pointing out that 4,300 level. I mean, we got up above that a little bit today, but unfortunately we're closing back down, and I'm probably gonna, in my personal portfolio, get a little bit more prepared for shorts in the next day or so here. So we'll see how that goes. Anyway, thanks guys for tuning in today. We'll be back again tomorrow with Rob Friesen on the closing print. So you have that to look forward to. And then Friday will also be, I believe we have Kenny Glick from hitthebid.com. So make sure to tune into that on Friday. Anyway, thanks everyone for tuning in, and we'll see you guys tomorrow.